How one man's ego destroyed a $47 billion unicorn. In early 2019, a company called WeWork was on top of the world. It had a private valuation of an astronomical $47 billion, making it worth more than corporate titans like Ford or Kraft Heinz. Its founder, a charismatic 6'5" Israeli named Adam Neumann, wasn't just leasing out desks. He was on a mission to elevate the world's consciousness. He preached about community, revolution, and a whole new way of living. Then, just 6 weeks after filing to go public, the entire empire was on the brink of collapse. The IPO was a certified disaster. That $47 billion valuation vanished into thin air, and Neumann was kicked out of the very company he built. This is the story of how one man's messianic ego, fueled by billions of dollars in venture capital, built a global empire, and then, in a spectacular bonfire of hubris and excess, burned it all to the ground. To understand how spectacularly WeWork fell, you first have to understand the hypnotic vision of its founder. Adam Neumann and his co-founder Miguel McKelvey launched WeWork in 2010 as the world recovered from the 2008 financial crisis. Work was changing, and businesses of all sizes were looking for flexibility that rigid 10-year office leases couldn't offer. Neumann saw a chance to sell something much bigger than office space: community. WeWork wasn't just a desk, it was an experience. The offices were gorgeous, with modern furniture, an endless supply of craft beer, and a calendar of networking events, yoga classes, and legendary parties. They were building what they called the world's first physical social network. The concept was electric. In a world that felt isolated behind screens, WeWork offered belonging. Neumann, with his long hair and prophetic speeches, was the perfect frontman. He talked about energy, not profits, and investors, desperate for the next big tech unicorn, drank it all up. The business model was simple but fundamentally flawed. WeWork signed massive, long-term leases on buildings, committing to pay rent for 15 or 20 years. They then rented out the space on flexible short-term contracts. This created a huge risk, long-term debts funded by short-term cash. Any dip in demand could lead to catastrophe. But in the startup boom of the 2010 ESAs, the only thing that mattered was growth. The real rocket fuel came in 2017 when Masayoshi, son of the Japanese tech giant SoftBank, met Neumann. Son was famous for making huge, gut-driven bets on founders. He challenged Neumann to think bigger, and over the next 2 years, SoftBank poured more than $10 billion into WeWork. This shot the company's valuation from $20 billion in 2017 to an unbelievable $47 billion by January 2019. WeWork became the largest private office tenant in Manhattan. Neumann was treated like a messiah of the new economy. But underneath the kombucha taps, the company's foundation was pure recklessness, built on an ego that was about to spiral completely out of control. For the $47 billion price tag, Adam Neumann's belief in his own destiny became absolute. The company culture morphed into a personality cult with Adam at the center. This was the cult of we. The lines between professional and personal life were erased. Employees attended mandatory, thank God, it's Monday parties and a hedonistic multi-day annual summer camp festival. This was all part of Neumann's big idea. That work should be your whole life. This culture of excess started at the top. Neumann flew on a $60 million Gulfstream G650 that the company was pressured into buying. Tequila shots were a regular part of meetings, and stories emerged of him hotboxing the private jet with marijuana on international flights. His impulses became company policy, like a sudden company-wide ban on eating meat that apparently didn't apply to him. His wife, Rebecca, was named a co-founder and chief brand officer, and the IPO filing revealed that if Adam died, she would help pick his successor. She was known to fire people simply because she didn't like their energy. Together, they ran WeWork like a private kingdom. This entitlement led to cartoonishly bold conflicts of interest. Adam Neumann would personally buy buildings and then lease them back to WeWork, making himself the company's landlord. In the most infamous deal, he had WeWork pay him $5.9 million for the rights to the word we after a rebrand. A move so outrageous public backlash forced him to return the money. The board of directors was stacked with his allies, and special shares gave Neumann 20 times the voting power of regular shareholders, making his control absolute. He treated the company like a personal piggy bank, cashing out $700 million for himself before WeWork had ever turned a profit. All while the company went on a bizarre shopping spree, buying everything from a wave pool company to a superfood brand based on his whims. The whole operation was a real estate company pretending to be a tech company, a ticking time bomb. In August 2019, when WeWork filed to go public, the world was about to see how ugly it was inside. On August 14th, 2019, WeWork publicly filed its S-1 document to go public, and it was a bombshell. For years, Neumann's charisma had hidden the ugly financial truth, but now the picture that emerged was shocking. The S-1 was called a masterpiece of obfuscation. It was dedicated to the energy of we and used the word technology over 100 times in a desperate attempt to frame itself as a tech company, not a real estate business. But no fancy words could hide the catastrophic numbers. The S-1 revealed that in 2018, WeWork lost $1.9 billion on revenues of $1.8 billion. It was spending $2 for everyone it earned. The filing also laid bare the business model's fatal flaw. $47 billion in future rent obligations against only $4 billion in commitments from its members. On top of the jaw-dropping losses, the filing confirmed Neumann's iron-fisted control, the shady self-dealing, and the strange loans the company had given him. The part about his wife helping pick his successor was met with open ridicule. The backlash from Wall Street and the press was instant and brutal. NYU professor Scott Galloway tore the company to shreds, calling WeWork a house of cards. The company that had been valued at $47 billion just months earlier became an industry punchline. The planned IPO valuation crumbled, plummeting from $47 billion to whispers of just $10 billion. This wasn't a market correction. It was a total rejection of the WeWork fantasy. The IPO, meant to be Neumann's greatest triumph, was now an anchor dragging the company to the bottom. The fallout was fast and merciless. Last-ditch efforts, like slashing the IPO valuation and Neumann agreeing to reduce his voting power, were too little, too late. By mid-September 2019, the IPO was officially canceled. The dream was dead. With the IPO gone, the company faced a catastrophic cash crisis. It had been burning through billions, and without that money, bankruptcy was imminent. The blame landed squarely on Adam Neumann. His chaotic behavior and self-dealing were now massive liabilities. His biggest backer, Masayoshi Son of SoftBank, finally lost faith, and on September 24th, 2019, just over a month after the S-1 was filed, Neumann was forced to resign as CEO, but he did not leave with nothing. In a move that caused widespread outrage, SoftBank put together a bailout to save its own investment and take control of the dying company. As part of the deal, Neumann was given a golden parachute reported to be worth up to $1.7 billion, which included a $185 million consulting fee and the chance to sell nearly $1 billion of his stock. It was a staggering exit for a founder who had led one of the most spectacular corporate collapses in history. A new leadership team began a painful cleanup, laying off thousands of employees and selling off the random side businesses. The $47 billion unicorn had been brought to its knees, its valuation cratering to less than $8 billion. The era of Adam Neumann was finished. Even with Neumann gone, WeWork was still bleeding money, stuck with its flawed business model. Then came a near-fatal blow, the COVID-19 pandemic. The global shift to remote work destroyed the demand for shared office space, pushing the company further toward ruin. WeWork limped onto the public market in 2021 via a SPAC merger, but the decline continued. Finally, on November 6, 2023, the inevitable happened. WeWork filed for Chapter 11 bankruptcy. This last step allowed the company to slash its debt, and, most importantly, walk away from hundreds of its most expensive leases. In June 2024, the company emerged from bankruptcy, much smaller, leaner, and as a private company controlled by its creditors. The story is now a classic business school case study with clear lessons. The danger of prioritizing growth over profit, the necessity of a strong board for accountability, and the dark side of founder worship, where charisma is mistaken for competence. So where are they now? WeWork is still around, a shadow of its former self. With a new CEO, John Santora, appointed in June 24, it is focused on its most profitable locations, hoping to finally turn a profit. And Adam Neumann. He walked away a very wealthy man. In a twist that surprises no one, he's back with a new real estate startup called Flow. In a stunning display of Silicon Valley's short memory, Flow attracted a $350 million investment from the firm Andreessen Horowitz in 2022, earning it a unicorn valuation of over $1 billion before it even opened its doors. Neumann even tried to buy WeWork out of bankruptcy in 24, but his bid ultimately failed. The WeWork saga leaves us with a big question. Was this a freak show, the result of one larger-than-life personality and a flood of easy money? Or is it a symptom of a much bigger bubble mentality in the tech world? As new founders chase the next big thing, the ghost of WeWork serves as a powerful and very expensive warning. If you want more deep dives into the biggest stories in business and finance, make sure to subscribe. Thanks for watching. The rise and fall of WeWork is more than just a business story. It's a modern drama about ambition, power, and the intoxicating, dangerous nature of telling a great story. Adam Neumann didn't just sell office space. He sold an idea of a better, more connected way to live. But in the end, a story he told couldn't survive the truth. And a $47 billion empire, built on a dream, vanished almost as fast as it appeared.